Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra and with me is Mangla Malu, and these are the top headlines on Midcap Radar. Midcaps turned negative for 2022 amid a broad-based sell-off as global pressures and renewed concerns over COVID spread take center stage. The Nifty Midcap Index slumps over 2.5%, while Nifty and Sensex shed over 1% each.
Landmark Cars and Abans Holding take a drubbing on listing as investors' sentiment turns and valuations don't offer enough comfort. Auto dealer Landmark Cars management tells CNBC-TV18 they remain focused on the premium and luxury segment, and they expect to take market share from their BYD's EV business to 15 to 20%.
Ingersoll Rand India surges in a weak market after announcing that it will invest 170 crore rupees to set up a new manufacturing plant in Gujarat.
Brokerage is bullish on SBI Card after it continues to gain market share with record addition in credit cards. Morgan Stanley has an overweight rating on the stock.
City Union Bank extends losses after RBI flags divergence of nearly 260 crore rupee NPAs. The management tells CNBC-TV18 stressed assets to the tune of 65 crore rupees are likely to be recognized, even as it says the lender is seeing significant recoveries from old NPAs. Okay, those are the top headlines that we are tracking. The pressure on the market continues. We did see some recovery from the lows, but still it's a 220-point cut on the Nifty. And mid-caps, they're bleeding in house. So that particular index is down 840 points. At a point in time, the index was down almost 3%. So yes, there has been some recovery from those levels, but still, it's a dark shade of red across the Indian screen. A couple of stocks in the broader markets which have fallen sharply. So we have something like a BLS International, Huhtamaki India. That stock was up 10% yesterday. You have the fertilizer stocks that have been the stars in the last couple of trading sessions. But today, these all stocks are down. Nifty right now at 17,900, but the undertone definitely is bearish, and the global cues, they are weighing on our markets.
They are, and the portfolios are going to be bleeding today because you have nearly 12 stocks declining for just about one advancing. And just take a look at a bunch of stocks which are declining. The texture of the stocks which are declining are the ones which had seen a big gain in this year itself. Union Bank down around 6.5%, Canfin Homes down around 6%, and in the broader markets, the non-F&O markets as well. GE Shipping, a mover in this year, almost 120% higher this year, has corrected about 10-odd%. Arvind Fashions is the other one, which is down 9%. Garden Reach Shipbuilders, again, another defense stock, which is up 82% this year, has seen a bit of sell-off. In fact, more than a bit of sell-off, 9% lower on that one. And Kalyan Jewelers is the other one, also, declining on huge volumes, down almost 10% on that counter after having rallied around 62% this year itself. So portfolio is definitely bleeding a lot more than what the frontline index has you believe, which in itself has seen a big cut. In fact, as we speak, the Nifty is down almost 1,000 points from the record high that it hit earlier in this month. 18,877 was the record high, and then we have the Nifty just above that 17,900 mark. Hemen Kapadia of KRChoksey joins in now. Hemen, things have turned for the worse suddenly in this week itself, and from last week to now, it looks like an absolutely different market.
Very good afternoon, Mangalam. Thank you for having me. But frankly speaking, this was in the asking. We ignored too many technical negatives signals. The market. The bank Nifty went up to all-time high, so most of us were stupefied that, the Nifty will follow suit. But no, that was a red herring. Bank Nifty came down, and we were overbought, negative divergence. There were n number of things why we should have corrected earlier, and 18,800 wouldn't have sustained. So frankly speaking, yes, that's happened now. I think that, like you said, the sea change from last week and this week, and now suddenly everybody's ultra bearish. We are coming to supports. I think downside should now get limited. I think Reliance and Infosys, two stocks which could turn the market, and they probably will in the next 2 or 3 trading sessions. So I wouldn't be ultra bearish right now. And yes, nothing looks good. Everything is pretty bad. But yeah, I believe by Tuesday, we should be posting a small bottom. Mangala.
Okay, so you're not ultra bearish. That's a different view that we are getting, and that's what makes the market right. Hemen, in that case, are you looking at creating any long positions, or your recommendations are on the short side?
Well, frankly speaking, I'll just hedge my position. There is one sell, it's looking weak, but honestly speaking, after a 1,000-point fall, selling something now, I don't think that's the right strategy. But Yeah, I picked an outperformer. Firstly, there's a sell call on Britannia at 43.40, stop loss 4400, target 42.20. Crossover sells, negative divergence, mechanical indicators showing weakness. So this is a sell call. A second buy call is a counter trade, and I still feel that a lot of, IT is one sector which should turn, but this buy call on is not on IT. It's a buy call on Jubilant Foodworks. Deeply oversold indicators seem to have bottomed out. Yes, the stock has shown weakness, but I believe it's a slightly high risk contra play. So one can buy Jubilant at 5 and 5, stop loss 495, target 555.
Okay, Hemen, thank you so much for joining us, taking us through those picks, and have a great weekend ahead. Well, that's a technical check on the markets. Now we'll slip into a short break. We'll connect with GS Chahal, who's the CFO at Make Money Organics. They have forayed into nano urea manufacturing. We'll get more details on the other side.